Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, February the 11th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not a whole lot of economic data today. We did get unemployment claims. 269,000 versus 287,000, which was what was expected. And natural gas storages came in at negative 70 billion cubic feet versus 82 billion cubic feet. So a little bit less of a drawdown than what was expected. We also have a 30-year auction later on today. The overall market is down quite big and was down even further earlier this morning. As you can see here, /NQ, which is the E-mini NASDAQ, is down about 53 points. Now, it's just about this whole global economic slowdown for the most part, and there's a lot of bank risk. You know, people are really worried about these banks being solvent. And, when all the banks come out and start saying, no, we're fine, we're liquid, we have plenty of cash, that's when people start getting really nervous. That's what happened in 2008, and we know what happened thereafter. So the overall market has been really skittish. As a matter of fact, the bonds printed another historic high right in the 170 handle this morning before the equity markets opened up. It did sell off quite a bit, but now it's starting to come back as the equities are selling off. So this is pretty historic, and Fed Chairman Yellen is speaking in front of the Senate Testimony Committee, and they keep asking her about this, and she is continuing to say that they are looking at normalizing rates, which means raising them, but the bonds are still fading that. Here is a chart of the E-mini S&P, as you can see, /ES, and are just off the lows. The lows were actually printed overnight, so I wouldn't be surprised to see it go down there and print that intraday and get that printed, but then we'll have to see what happens after that. We are in no man's land. The next support level is quite a bit further lower, so the bulls are in full control. Interesting chart right here. This is the 15-minute chart of the E-mini S&Ps, and broken down in daily segments as well. Yesterday, this value area was much higher, and it has shifted lower from these several days of being down here. So that's interesting. That's showing that the bears are taking control, and volume is starting to pick up at these lower levels, which is giving validation to this sell-off. S&P, or this is the SPY, which is the Spider ETF equivalent to the S&P 500. Now, I've been legging out of this iron condor that I put on several over a month ago. I think it was like January 5th or so, and I got out of the calls on the sell-off, and thinking that if we came back up, those calls the call spread side would only hurt me. It really never came back. As you can see, we've just slowly continued to sell off. I got breached on my 184 puts this morning, so I decided to cover that right off the bat. As a matter of fact, I put the order in before even the market opened, and I had on the February 184 179 put spread left of that condor, and as soon as I got breached on those, I decided to cover that and covered it for $2.05. So on the overall condor, I ended up losing a little bit of money on that, but I just didn't really like the market, or the tape action, I guess, if you will, in the markets today, especially with those bonds spiking higher. These bonds could be looking like they are a sell here pretty soon. They just seem to be feels almost like capitulation at this point on the bonds. So I might be throwing out a trade in bonds here relatively soon, or maybe in TLT or something along those lines. For the earnings trade, I did Tesla, and I even tweeted it out yesterday on Twitter late in the day. I did the February weeklies, and I did I bought the 130 puts and then sold the 125 puts. So that would have been a debit, but then I financed that put spread by selling the 108 puts for a 16-cent credit on there. Obviously, Tesla just spiked higher this morning, or off the open. It was on earnings that actually missed by quite a bit, and I thought that I was going to be worried about my 108 puts, but their forward guidance was that they were going to sell a lot more cars than what was expected, which gave them a lift. Forward guidance is only a pulling a number out of a hat, if you will. So whether or not they can actually achieve that, especially with crude oil just continuing to get slammed, as again today making a new low at $26 a barrel. So the overall markets are continuing to slide. It does not look like it has any buoyancy whatsoever. So it's going to be interesting how low crude can go. Some people are calling for $1 a gallon of gas coming up pretty soon, because people have got to start moving this inventory one way or another. So that might be the way to just keep lowering the price of gas as this goes down. It seems like gas is being held up a little bit, and this crude oil continues to go down, but that is creating a lot of inventory going forward. So that's going to be a bit of a conundrum for these guys. That's about all I got for you guys today of what I've done. Tomorrow we're having a webinar on volatility crush. And with this inflated volatility, a lot of these strategies aren't coming into the money, even though you're directionally right, because when volatility gets pumped up, it kind of holds off on the theta decay. You might have a lot of theta in your portfolio where you're thinking that it should be decaying every single day, but as volatility continues to rise, like it even did today with the VIX, it's going to hold up that overall premium. So you might be directionally right, but you're just not getting paid for it right now. A lot of people are reaching out to me, saying, I've been getting beat up this last month with this sell-off. Well, stick with the plan, stay with it, keep selling this premium, because right now with the premium pumped up, it is going to take a little bit longer to come to fruition, but once it does, it's going to really come out of that rather quickly. So stick with the plan and stay with it. At the end of the day, if you are doing these types of strategies, you're going to be doing much better than what a fund manager is doing at this point. Those buy and hold guys are really getting crushed. So that is the takeaway from this, I guess, if you will, is stick with the plan and keep selling this premium, because it will come out. And when it does, it will come out quickly, and you don't want to miss that boat as far as I'm concerned. So go to ProTraderStrategies.com, check out that webinar that we're doing tomorrow. It's going to be really a really good one, because right now volatility is what is driving the markets. All right, if you can't take that, take it easy.